Thanks, Greg. Here's Hilton Tarrant with the business news headlines.
Well, BHP Billiton dumps its bid for Rio Tinto as debt fears grow. The JSE and the Bond Exchange and talks about the price and structure of a potential takeover. Tiger Brands may make its offer for AVI hostile, and economic growth slowing to a decade low, backing the case for a rate cut in December. The oil share closed up 6 3/4 at 22.63. Financials up 5% on the day. Gold is at $820 a fine ounce. A barrel of Brent at 51. The rand is at 9.81 to the dollar, 15.03 to the pound. The euro at 12.79. Get MoneyWeb SMS alerts on your cell phone while you're out of the office. To subscribe, SMS the word alerts to 37780.
Wayne McCurrie of RMB Asset Management in the studio. Big day for shares again.
Very big day. At long last, we're seeing some volatility on the upside. We've had it 2 days in a row now, but a very, very strong day led by the miners. So the market up almost 7%, but the mining index up 12%, led by Anglo-American 14%, and then Billiton at 20%. Now, and it was up 25% at one stage.
Explain the Billiton move.
Well, Billiton, basically, they came up with quite a bit of news today. Obviously, the biggest news was they're not going to do the hostile bid for Rio Tinto. They've called it off. They probably can't get the financing. The market's in turmoil now, and they can probably get it cheaper at a later stage, and they're concentrating on their own businesses.
So management was doing something that the shareholders weren't keen on.
Well, not necessarily. Management decided that it wasn't in the shareholders' best interest given the current turmoil. Remember, they launched this bid a long time ago when the market was completely different to what it is now. Mm-hmm. So they've done the right thing for the interim. I think the deal will come back at some stage, but for the moment, it clearly is off.
But Wayne, if the share price goes up when
yes.
you cancel a deal,
no,
clearly shareholders
definitely
didn't want you to do the deal in the first place.
Look, I mean, Anglo's also went up 14%, and the whole mining index went up, so it was a green day.
So part of
it is just the general market, but certainly this was perceived as good news. They did say they're doing another big expansion in their iron ore in Australia, and they've also impaired some nickel assets in Australia. But that news just basically disappeared when they announced that the Rio bid is off.
Now, your proverbial man from Mars will see that the gross domestic product or the economic growth rate in South Africa is down to just about nothing, 0.2%. Yeah. And he will wonder, on a day when that news comes out, why would the share market go up?
The share market's a funny thing. The share market, okay, let's just deal with the share market in two halves. The big bounce in resources is really on the back of global conditions seems to be stabilizing, and the US announced a new aid package. So therefore, of course, they've just fallen so much. So that's why they went up. Surprisingly enough, bad economic news is good for the non-resource shares because it means lower interest rates sooner. And lower interest rates sooner is good for the share market. And that's why the non-resource shares went up on those GDP data coming out.
But interesting, internationally, it started off very strong today.
Yes, now petered out, yeah.
Now it's petered out after Hank Paulson, the Treasury Secretary in the United States, has had a press conference at which he said we got more problems than we thought we had. We're still going to have to deal with these issues. It's interesting.
Problems haven't gone away.
But during these press conferences, you see the markets
Watch the market,
change.
Yeah, it does.
People make interpretations pretty quickly, right?
Yeah, they very much so, especially in these turbulent times. Look, a bounce is due, and it is happening right now, and it'll probably go a little bit further, US and worldwide, and that's why we've seen the rand strengthening. The real big question will be, what do we do, let's say, the end of January, when the market's, let's say, another 10 or 15% higher? Because then, that's when the critical decisions are going to have to be made about the state of the world's economy. I mean, the US had third quarter GDP forecasts, I think, or actual numbers coming out. The economy shrank by 0.5%. So actual physically shrunk. So, we are going to continue seeing this bad economic news.
Tace Visser joins us now. He's the chief executive of Remgro, one of the best performing shares on the JSE over an extended period of time. But it's all changed, Tace. The financial results that you brought out today for the 6 months to end of September gives us a reflection or an indication of what the new Remgro is going to look like. This is after you've unbundled your shares in the tobacco group, BAT. Just to refresh our memories, why was that done?
Alec, good evening. It was essentially done because of, I would call it fiscal pressure in Luxembourg, where, as you're aware, we held our BAT shares to a Luxembourg structure, which are introducing a withholding tax from the end of 2010 of 15%, and we felt that cost would be prohibitive, and hence we distributed the BATs and the Renettes accompanied that directly to our shareholders. So it was It was for fiscal reasons.
And roughly half of the profits for the 6 months at the end of September were generated by those tobacco interests, which aren't part of the group anymore. So
Yes.
it's going to be a different operation in future.
Yes, absolutely. We've attempted to give a view on the pro forma numbers. So you'll see in the profit announcement we've indicated what the pro forma earnings would look like, excluding BAT for the 6 months.
And their headline earnings down 13%.
You see that down 13%.
Do you expect that to continue in the second half at that rate?
I think if you look at what the major contributors to that decline was, firstly, the decline in the contribution from First Rand and RMBH, which was down by about 26%. Speaking to that briefly, if the conditions remain the way they are, we would expect that trend to continue into the second 6 months. Although we're reporting an isolated or a discrete 6 months, their last 6 months of their last financial year to June. The other big impact was, which has no cash flow impact, but in our investment in Kagiso Trust Investments, we had fairly significant mark-to-market or fair value adjustments, which were negative in this current reporting period, whereas it was positive in the previous reporting periods, swing about 200 million, because they mark their investments to market value, which, if you take into account what's happened with equity markets, that was the negative adjustment there, and we take that hit through our headline earnings. So earnings down pro forma by about, as you said, 13.5%. Cash earnings up by about 20%. If you look at the underlying cash flow.
Tace, just to close off with Reinet, the operation that has now been spun off to your shareholders. We're a bit bemused here in the studio about the share price and how that's being calculated at the moment.
I'm as bemused.
What's the real value of that?
If you look at the underlying value, which consists essentially of BAT shares in principle and the balance in cash, although BAT is dominating that portfolio, it's currently trading at a discount of between 30 and 35%, if I have my numbers correctly. And I think that's a reflection of what people's view are of a lot of investment vehicles. I think depending on how the rights issue goes, that might change. But I mean, it's difficult for me to speculate on that one.
Tace Visser, Chief Executive Remgro, and Remgro itself is trading at a discount of 21% today. The share price at 74 Rand. The value of that investment operation is 94 Rand 36. But if you want to get real value for money, it seems like Reinet is the one to go for.